Okay, let's get started. Today we're going to be talking about how exactly strategies are built, so that way you have the confidence to trade. You'll also learn why all systems will fail and why all traders are actually losing money. It isn't a coincidence and it isn't by accident. It's actually very simple once you understand. So let's log in on NinjaTrader. NinjaTrader is a coding software for financial charts where they give you 50 years of data access depending on the kind of data you have. So that way you can test all of your strategies in real time on the live market that's actually moving. So it's not a back test. What a back test is where people will plug in a bunch of indicator rules to a strategy and the financial report will spit out how it performed over time. Quote, performed over time. It's not real. It's fake data and it's fictitious. On backtest reports, the data actually changes every 3 months. So therefore, they never get the real price. Why does the data change every 3 months? Because it's being filtered through many middlemen, brokers, and retail traders and private companies and data miners who like buy data. And then you get the filtered price. So it's not the actual data. And then the coding itself is flawed, so it never actually works. Let's just open up a chart. First, let's open up a minute-based chart. So here is a minute-based chart right here. So this is GBP JPY, very common Forex instrument. Now, let's get into exactly how technically strategies are built. There's not any fluff or anything like all these extra steps. Let's just keep it as simple as possible. So here's the latest price of the current live market movement. How can you predict the future of market movement if you have not tested all the past data down to the decimal, so that way you know exactly what will happen candle by candle? You can't. But what's happening with traders is they're downloading trading softwares or they're just starting to trade and they can't test the market data. What they're doing is just randomly entering and exiting and gambling on trades, which is guaranteed going to fail. Before we go any further, let's explain why it's going to guaranteed fail. This is information that comes from George Soros's book on the alchemy of finance. It's a very long book that a lot of people find complicated, but we're here to simplify it for you so you understand. On the x-axis is time and on the y-axis is price. Now, ignoring the digits 139.9, let's just look at the last 2 digits because that's what's actually moving. What's actually moving is 2 and 8, 1 and 8. These prices right here, the last 2 digits, 1 and 5, 1 and 6, that's what's actually moving. Now, once you understand that that's actually moving, that's what we're looking at. That's what we're going to quantify into a system. Now, once you understand that the market can only move from 1 to 9, you have eliminated tons of bias that is normally existing. What I mean by 1 to 9 is that numbers only exist 1 to 9. There's only 9 digits, and then there's 0. So therefore, how can you be extracting 500, 1,000, 200% return if the market itself can only move from 1, 2, 3, 4, 5, 6, 7, 8, 9, and then 0, and then the next 1, 2, 3, 4, 5, 6, 7, 8, 9. And it keeps doing that over and over every day. It's literally impossible to be making 5,000, 10,000, whatever percent returns that people hope for in trading. First of all, you'd be a billionaire if you could do that. But secondly, it doesn't even move that much. So therefore, you have to quantify it in a way that has exact ranges that are possible on a daily basis. That means small 1 to 2% moves, because you can most probably assume that the market will move 1 to 2% a day. It will move from 0 to 9 to 0 to 9, which makes up 2% in market movement. But it's not going to move from this one all the way up here 1,000 points away and then back again for you to capture 1,000%. So once you understand that, you have eliminated those variables that set you up to do the wrong things. If you are trying to make 1,000% return, you're never going to stumble upon the right things to do because you're looking in the wrong place. It's kind of like you're trying to play golf with a hockey stick. You're just showing up with a totally different set of criteria to do something that is not related to your tools that you're using. The tools being the market movement, and your criteria being, I want to make 1,000%. Or which whatever someone has told you, like turn 200 into 5,000 and things like that. And once you understand that, you need to quantify the data. What you do is you go back to the very beginning of market movement on that data set, which should be 50 years on NinjaTrader's 50 years. And then you start from the hard right edge of the page and you start creating educated rules based on legitimate trading fundamentals and technical knowledge, such as news indicators, math, like the types of formulas that exist in trading, such as today's high minus yesterday's close. And you put those into a bunch of rules and you test it one by one. So let's do an example. We would take, let's say, yesterday's close minus today's high equals the market is most likely going to be buying. Where does that hypothesis come from? When you have a standard moving average is the most common measurement of the market. It determines trend, supposedly. So here's a moving average. Once it breaks above the high of the day minus the close of yesterday, let's say your strategy says buy. Now, based on this closing price right here, remember, we're only looking at the last two digits because that's the only thing that moves, 52. So from entry price 52, we're going to say that our decent logical entry and exit will be 2 points. So from 52 up to 72, right up here. And then our stop loss will be down at 32, right down here. So now we entered at 52 and we go forward one by one. And we see if it actually hit our stop or target. Looks like it's going to hit our stop. And you keep going and going. Didn't hit our stop yet. Still didn't hit our stop. Remember, our exit is 32. Right there, broke our stop loss. Right here, 1 day later. And now you would go on Excel and you write that as -2. And now you go forward. Again, you would go to the next candle now and say that if it's the yesterday's low minus today's high equals buy, but right now it's below, so therefore it's sell. So now right here at 81, 31.81, we are selling. Stop loss is stop loss is up at 33.81 and target is down at 29.81. So let's move forward. Waiting, let's keep going. And there we go. It broke down to our target at 29 right there. This candle right here. And you would have recorded that as +2. So you're getting the idea. You have a stop loss and a target based on the rules that you set, and you're going to go forward one by one and physically test that data up to 50 years. Now there's coding software that will do this for you after the first year, which we have that coding software if you need it. Otherwise, it's very expensive. They usually charge like $20,000 for it, but we do it for as low as like $100 because we have coders working full time. But that's just if you're trying to build a strategy. And now you record this over and over, and you end up getting a picture of your strategy's equity curve like this. Data, formulate. So it starts to look like this. And now once you have a system that is profitably or looks like it's consistently creating a positive equity curve based on the rules that you formulated, then you can start testing that on live data. So again, in order to build a strategy, you're going to go to the beginning of 50 years of data. You're going to isolate the time frame. In our case, our time frame is 24 hours. And you're going to go to the candlestick and apply your rules. In our case, our rules were, for example, this is a very basic example, when yesterday's close is lower than today's high equals sell. When yesterday's close is higher than today's high equals buy. That's simple strategy. Target to, stop to. So right here, let's just say we started right here at midnight. So we turned on the charts and we went right here. And right here, it's below the moving average of yesterday's high. So therefore our entry is at 21. Remember, we're only looking at the last two digits because that's the only thing that moves. So from 21, we're going forward one by one. Target is up at 41. And no, sorry, stop is up at 41. Target is down at 01. And that's it. Go forward now. Let's see if it hits 41 or 21. right there, it hit 41 and we're out. You would record -2. As soon as it hit 41, we're on the opposite trade. Right here, we bought at 43. Again, same thing. And right there, stop hit, -2. Again, we got in at 23. Right here, we got in at 23. You can see that. At 23, same thing. And it hit our target right down here, +2. And you record that over and over for the 50 years. You add it up and you get this result. And then you test it on live data. And this is why all traders are failing, because they're blindly opening an account and they're blindly just watching the current market move and just gambling based on nothing. Most traders will say things like, hey, I purchased this this stock option, or hey, I'm in this great Forex setup on the USD CAD. What do you think it's going to do? And they don't realize that question is inherently flawed. It goes back to the example of you're trying to play golf with a hockey stick. Because for you to ask me that, what do I think about your trade in USD CAD, is gambling. You have not tested all of the past market data into an exact system using the strategy that you are now asking me about in order to make an exact educated guess on where the market's going. You just did something for like a few weeks and you heard some news or something, or you felt like it's going to do something and you entered that trade. And now you're trying to compensate for your insecurities by asking how I feel about it. Doesn't make any sense. So the question is inherently flawed. It's similar to a brain surgeon asking you your opinion on how he did on his surgery last week. Makes no sense. You have no data on his past job criteria or things that he's done or exactly what the surgery was about and so on. You're not even a doctor. So there's all these things that are just very biased that don't make any sense. A simpler example you could say is a teacher is asking you how they did last week in their class. And you're like, I'm not even enrolled in your class. I don't even know what class that is because you haven't tested all the data on what they've been doing, what they've been lecturing about and writing about for the past few years for you to make an educated guess on their performance. So it's the same thing in trading. If you show up and you ask, what do you think about this trade? That trade doesn't make any sense. And that's how you test a strategy. Now, we're not using minute-based bars. Let's take it a step further now. You understand how to build a trading strategy. You go back in time to all the market data and you record it one by one and you test it live. You're going to discover that minute-based candles don't work. Why don't they work? Because minute-based candles are random. These candles are all random in size. Each minute produces a random size. Therefore, your target and stop will always be random. It will always be changing and fluctuating based on the market that is forever random. You need exact range-based bars. That way you have exact fluctuations. Let's open up the same chart as a range-based chart. GBP, JPY. And there we go. Just let it load up. And there you go. As you can see, on the left is the same exact chart, but it's moving in ranges. It's moving in exact prices, whereas the one on the right is moving based on time. This one is exact ranges, so therefore your equity curve will manifest as exact ranges. Your equity curve will be exactly +1, -1, +1, -1, whereas this one will be +1, -5, +7, -2, totally random sizes. Whatever you do on a minute-based chart will reflect in your equity curve. What that means is range bars will be +2, -2, +2, -2, fixed ranges. Minute bars, you'll see that your trades are like -3 points, +5, -2, +10, -3, totally random trade sizes. Therefore, your equity curve will always be random. Let's just make this random right here. And then make this one linear. We're just adding up the totals. And now look at it. So you'll see this equity curve is totally random in size. We made it profitable, but it shouldn't be. And then this one is exactly linear. It's going in exact ranges. This is a biased picture. Let's open up Trusty Paint. So if you're using minute-based bars, your equity curve will be like this. It'll be totally random in size. because your entries and exits are totally random. But using range-based chart, your equity curve will be linear, like an exact move, like this. And by doing that, you'll be able to determine the trend and know exactly where the market's going. So once you understand how to build strategies, you'll realize these range bars are the way to actually build systems because they simplify and clean up your charts. There's no indicators on the chart. There's no random lines. It's a very clean price action for you to determine the trend. Entry right here, close all the way down here. And now we're on a buy right here and we're waiting for this to buy. Previous signal, huge buy trend. Entry right here, close all the way up here. That was 139.89 up to 139.96. That was 100 points. And this one was 95 down to 92. So this was 30 points. No, 45 points. And then here is a choppy trade. So this was stop loss. You entered here, stop out. You lost approximately 91, 15, 15. So there, negative 15, negative 15, negative 15. So you're down 45, 90 to 89, plus 7. And then you recovered it all with this trend. And then same thing on this trend, all the way down on this trend. And now we're on this buy right here, waiting for this to close. And you can see it's doing the same thing as the one on the right, but the one on the left is very clean. The one on the right is totally random. You can't quantify that into a system. No, the indicators are built directly into the chart. So the question was, are we using indicators? We're using every single indicator available. So we have all these indicators here that are built directly into these candlesticks to determine the direction. Why are we using all indicators? Because once you start testing the markets like we were a few minutes ago, don't worry. And just in case you missed how to test indicators, we'll email this to you so you know exactly how to build a strategy. So once you understand how to build a strategy, you'll discover that using 1, 2, 3, 4 indicators is not enough. The market is too dynamic. It's changing all the time. If you use a few indicators, it will never keep up and withstand the tests of the market movement over time, volatility, random news, giant swings, all that. So you realize if you can't use a few indicators, it's not humanly possible to test like 50 indicators at once. You're not like a supercomputer, like doing like 90 math equations a second. But what you do is you take all the indicators, you get a coder to build them into one exact system that will loop the indicators and make them reverse each other every few seconds to give you an entry and exit system that will randomly trick itself into buying and selling based on complete random indicators. And what that does is it dynamically changes your entries and exits on the market based on the range bars. So again, we're taking all the indicators, plugging them into the chart, and then the range bars are giving us our entry and exit prices. And then the indicators are rapidly changing and tricking themselves to do the reverse of what they're saying over and over every second to give us randomly generated entries and exits based on these ranges. And what that does is it gives you a money management system so you can flow in and out of the market. Plus it gives you dynamic changing indicators that are happening in real time on real market data. Remember, we were talking about how current brokers, softwares give you filtered data, the middleman data, for free, which only goes back a few months. And that's why everyone's losing money, because they're only given a few months of data. This is a very important thing to understand, and it goes in one ear, out the other. Nobody wants to hear this, and they hate accepting the truth to themselves. Look at this giant buy trend that just happened. So this is a perfect buy. We saw it reversing, and now it's all the way up here, and that's it. But yeah, this is a very important thing to understand, that all softwares only give you 3 months of data. If you only have 3 months of data, how can you run a profitable trading business for 1, 2, 3, 4, 5 years if you only have 3 months to test? It's physically impossible. It's not impossible based on my opinion. This is a very well-documented fact, again, in George Soros's book, Alchemy of Finance, Quantitative Trading by Ernest Chen, Trading in the Zone, Mark Douglas, just Enter My Trading Room. I forgot the author of that book, but once you understand this, you'll eliminate all the bias variables that are stopping you from being successful in trading. Because if you're looking for the wrong things, you're going to get the wrong answers. If you're asking the wrong questions, you're going to get the wrong answers. An example of a wrong question is, can I make 20% a month? In order for you to make 20% a month, you're risking 20% a month. Are you seriously going to go to a millionaire investor and be like, yeah, invest $1 million. We're risking 20% per trade. It literally does not make any sense. So once you understand that, you can start asking the right questions and doing the correct moves in the market with an exact system that actually has your money management in mind and exact trades. Just give me a sec. Yeah, so that's how you test a system and why all current systems are failing. Right here, we just hit stop loss, so this would have been stop, and we reversed it at 97, and now we're up here. So this is where the buy and sell alerts are coming from. They're manually generated, so they're manually tested. It's not a robot. It's not like some like magical formula where we put in like all these different math equations and we started doing like quantum computing and physics and all this other stuff that people think is trading. You manually sit down and you test each individual day one by one with the rules that you have in place. In our case, it's all of the indicators on this chart. And then you record that on Excel spreadsheet like this, +2. So -2 is our stop loss, +2 is our target, over and over. And you eventually get a picture like this right here. And then once you have something that's viable and consistently moving over and over again, you can start testing that on live markets every day and do that in very small moves. And that's how you build a strategy. And that's why every trader is failing and losing money, because first of all, they don't have the data to test the markets. And then secondly, they're just making up hypotheses. And third, which is the most important thing, goes in one ear, out the other. I cannot tell you enough how many times I've told people this, and they still will contact me the next day and be like, hey, I got this amazing trade set up on GBP USD. What do you think it's going to do? And it makes no sense. Their sentence structure itself is inherently flawed. What do I think it's going to do? That's literally gambling. You're literally throwing rocks into a jungle and expecting positive results to come out, or any type of result. It makes no sense. You haven't mapped out the landscape to understand where you're entering and exiting with exact ranges. So therefore, asking what someone thinks is the same as the example of a doctor asking you what you think about his job. You have no idea what he did or what he's doing or where the market's going. It's also very well documented in George Soros's book that the reason I keep bringing up George Soros is, first of all, he has $10 billion. So he's a credible source. And I don't want to act like it's my own words. This is just from tons of experience over a decade and learning from people who are similar to George Soros, obviously not as rich, but they are legitimate traders and working in high frequency trading companies to know what we're doing and building quantitative trading systems for private companies and traders. So it's really important to listen to them when they write these types of things. And what he's talking about is that nobody can predict market movement. When someone tells you like, oh, I heard the news today and I think the market's going up, I heard the news today, I think it's going down. And like they have this following or like a bunch of friends or people who say like, yeah, he knows where the market's going. It's delusional. It's physically impossible. You're literally gambling on a long enough time scale of 10, 20, 15 years. Not even, you'll need like 1 year of data. You'll discover that it's 50-50. When you think that the market's going up, 50% of the time you're going to be right, 50% of the time you're going to be wrong, and vice versa. There's no such thing as market direction. All we can do is quantify the ranges into exact amounts and then buy and sell based on the parameters of how those ranges formed. So again, we can only quantify the ranges into exact amounts. Like you see, all these bars are the exact same size, and then follow those exact ranges to extract small gains out of the market that are a side effect of our safety. So profit is a side effect of being safe, not the other way around. Not, hey, how much money can I make trading? That's whoever's asking that, I know has just started like last weekend or maybe a year, but they're not really actually getting their hands dirty and building an automated trading system to understand the dynamics or even doing the research about how and who is making money in this industry. Whew. Hopefully that was very helpful. I've noticed nobody's talking about this. When you see all the trading knowledge on the internet, it's nothing at all like this. I myself have been working at a high frequency trading company here in Mississauga for the past decade. I now just went private and started doing it myself. So I don't involve myself in the day-to-day activities of selling systems to private companies. So I learned a thing or two that is not on the internet anywhere. And it's only recently that I got onto the internet that I discovered that everything on the internet is wrong. unless you're researching those books I'm talking about. Again, it's The Alchemy of Finance by George Soros, Trading in the Zone by Mark Douglas, which is good for your psychology once you've had some experience, and Quantitative Trading by Ernest Chen. Those books will really open your eyes as to what's going on. And these are people who manage hundreds of millions of dollars. So I would consider listening to them if I were you. And yeah, that's how you build an automated trading system. Just to recap real quick, step one, you go to the beginning of the market data. You start at the hard right edge of the page so you can't see the future of incoming data. And then you move one by one with your rules. Let's say our rules right now are if the candle is above the moving average indicator, I'm going to buy. So right here, we're going to buy at 78. Target, let's say, is 30, stop is 20. So there, hit our stop loss, done. And again, I'm going to buy 78, hit our stop. Keep going to the next candle, again, buy, and there it goes, went to our target. So what that was just there was one buy, failed, second buy, failed, third buy, profit. It went close to our stop loss. You see, it went very close to our stop loss. Our stop loss is right down here. See how close it went? And it reversed and it went all the way. And then you would record that on your Excel spreadsheet, -2, -2, +3. And then you'd keep doing that over and over, one by one. Next trade, here, sell, 77, went to our target, done. So there we are. So we're -2, -2, -4, +6. Total is +2. Now you would do this for 50 years of market data, which will take you many hours of time. And we've done all of that to build this system. We've literally tested every single market variable, every single indicator, every single thing that you think you're going to try in the markets. I promise you, we have already tried. So we can quickly catapult your trading experience and your journey by eliminating what not to do. Maybe you are on the verge of discovering something cool that you think might work. It would be good if you run it by us. We're not going to steal your magical formula. There's no such thing. So you don't have to worry about that. It's just good for you to run it by us so we can tell you what might be going wrong, ways to improve it, and how to make it into an exactly quantified system. So that way you can get that edge in the market to actually trade consistently. So save yourself a lot of time. Don't waste your time gambling. I cannot stress enough how many people are suffering. Even me talking about this will make your ego spark up and be like, what does this guy know? What, I'm going to do this, I'm going to do that. And I was exactly like you. When I was 17, I started when I was 17. I was exactly like that. Professionals who were in their 40s, who were moving millions of dollars, would blatantly tell me, there's no holy grail. There's no magical formula. You have to follow these rules. You have to follow these rules. And I ignored them for 5 years. For 5 years, I went and tested everything and had to discover for myself. I had to get burned myself to discover that what they're saying is correct. And that's the difference, is there's two types of people in this world. There's one that needs to get burned and traumatized to experience and understand something fully and be like, yeah, I get it now. And the other person who learns from others' mistakes. So don't be like me, don't be like them. Be the person that actually listens. Eliminate your ego, your pride, your bias, and everything else, and do what works. Because another thing that holds you back, or may not hold you back, I don't want to say this for everyone, but a really big thing that will hold you back subconsciously is the fact that you think that it has to be painful. You may or may not notice this is happening to you, but media and movies and your life and all these subconscious variables are actually influencing you to think that your journey to make actual money in the market, or long-term a lot of money, has to be painful. It doesn't have to be painful at all. The difference between someone who's highly successful in terms of money and health and everything is that they figured out those little hacks that would rapidly accelerate their growth process. The people who are in pain are at work. They're working for a salary, and they believe in these things like hope and God will do the right thing. None of these things apply when it comes to money. There's millions of people out there suffering who secretly believe that, oh, everything's going to be okay. Something has got to give. Something's going to change. It won't change. Time will fly by and you will die. That is the truth. And most people don't want to accept that because they think that they need to suffer to have good things. Suffering only exists in things like a workout program or when you're developing a skill. like it hurts to like build muscles and like those types of things, or like it hurts to become good at being a construction worker because like you may not be strong and your build or whatever, like you hurt yourself. But in trading, you can test thousands of systems for years and end up nowhere, literally just in debt, wondering where your life went, and just tons and tons of suffering. And you'll keep thinking to yourself that, oh, something's got to give, something's going to work. How's it going to work? It's inherently flawed. You're inherently testing strategies on 3 months, 4 months of data, yet you think it's going to work. It's not going to work. Remember, the definition of insanity is doing the same thing over and over and expecting different results. No matter what you've tried, we've already tried it and it won't work. And we're literally just throwing it at you that this will work. This is the only way to trade. Build your own system or use one that's already working. And there's no other way to trade. You know, as people may also want to convince you that, oh, there's thousands of ways to trade. It depends on your trading style. There's no such thing. These, again, are human bias emotions that have nothing to do with the market. This market is moving exactly like every other market. If you remove the name of GBP, JPY, this market is doing the exact same thing as every other market. There's no difference. It may be moving up and that one may be moving down, but they look identical. Therefore, there's no difference in any market except for how you quantify it and turn it into an exactly defined system. If it works for one market, it has to work for every other market. There's no such thing as, oh, I trade gold, I'm a gold trader, or I trade silver, or I trade futures or Forex or options, whatever. If it works on one chart, it works on the other chart, because at its most fundamental form, these are just lines moving up and down on a screen. And you could change this into a heart rate monitor style line graph, and they all look the same. Yeah, so those books will definitely turn a beginner into somewhat of an experienced professional. Mix that with real, actual trading experience, and you will be light years ahead of everyone else. So I'll include that in the email today, those books, as well as free PDFs to read those books. I highly recommend those books so that way we can all be on the same page and not be asking the wrong questions, because it's really important to understand those books, and those are the only ones that matter. And this is after having read every single trading book, every single resource, tested every single marketplace for over 15 years. So I really hope that you put those books to use and that you actually do what it takes to do it right and understand where all the money is being made and lost. Most of it's being lost. Actually, all of it's being lost. There's only a few people who will consistently do the same thing over and over and not change their rules, because there's nobody stopping you from changing your rules. The human brain loves to change rules. It loves to just go off topic every few minutes, and that will reflect in your trading. So make sure not to do that and do it like a machine. I hope this has all made sense to everyone, and I hope you learned a lot. I just thought I'd use today to really break down the layers of the market and how it's moving and why it works the way it does, and how to eliminate all that mist and fog that's shrouding your judgment as to what these lines actually are. Yeah, we teach you how to do it every day. You'll be amazed to know where the real money is made. The real big money is made in rebate commissions. So that's where the real big companies are making money. The high frequency trading I work for, or I used to work for in Mississauga, that's how they're making all their money. Yeah, so just what they used to do is, well, what they do now still is to get a $100,000 trader, and he starts trading on their servers, and then they collect the rebate on the commissions. So if you have a $100,000 trader and he is doing, say, $500 worth of transactions a day, they are taking 50% of that. So imagine he does 5 trades a day, which is very decent, and they cost $500 each. Those guys, that's $2,500 in total. The high frequency trading company will collect 50% of this volume, which will be 1,250. And they did that off of one trader. And now these guys have 100 traders on their floor. So they're getting 1,250 times 100. That's approximately $125,000 a day. So these guys are making $125,000 a day on average for nothing. No investment, no trading, nothing. They're just providing the traders these servers to trade on, and they're collecting half of the commissions. They're literally just being the broker. and then they get hundreds of thousands of traders to do that on their systems. And then what you have is this giant network of these brokers and traders who are not only making profit in trading, let's say 5% a year, but they're making, say, 5,000% on the rebate commissions. And that's how these big companies are making money. Really big hedge funds actually break even at the end of the year. The reason they made $1 billion in return is because of the rebates. Because if you can even make a system that will break even at the end of the year, you can make tons of money on rebates, because rebates will give you approximately 40% to 50% growth per account, because brokers are taking 30% of your balance every year. Traders don't even do this math. And they like to say, like, oh, you got to pay a fee to do business. That doesn't make any sense. Brokers are literally just charging you to take your money and make sure you lose everything. But large scale brokers will give you 50% of your commissions back, and that's rebate commissions. So rebates is where they make the really big money. And most people don't like hearing this because they believe in the dream, like, let's turn 200 into $1 million. That's not going to happen. Rebates is the really big money. And it feels amazing making money with no risk. That's just cash. There's a difference between investment return and all cash. Investment return is money on the line. It's dangerous. You're using it for things. Commissions return is just cash. You can withdraw that anytime. Pay your bills, get a car, get a house, whatever you want. So that's where the really big money's made. Actual trading companies, if you look at their returns, are doing 3%, 2%, 3%. But what they don't show you privately is the rebate bonus they did that year was 250%. What's 250% of $1 billion? That's $2.5 billion. But in their trading account, they only made 30 million. Because remember, 3% of $1 billion is 30 million. So they made 20 million, 30 million. But here they made 2.5 billion in the returns on the commissions. They have thousands of clients. And this is who's making really big money in the trading industry. You may hear freak accidents, such as like those stories of like traders on the news who are like, the genius whiz kid turns 10,000 into $1 million and things like that. Again, those freak accidents, those freak scenarios are not what you want to be. These are people who are in the right position at the right time. He may have bought the exact perfect stocks, the exact perfect trades at that time and made that $1 million, but you don't want to be that freak situation. You want to have a legitimate trading business that you can rely on long-term, that can be duplicated with anyone else. Those situations are just similar to the lady at the casino who won the jackpot that evening. There's always going to be those people, but you don't want to be those people. You want to systematically grow your trading business. And once you understand the steps needed, you'll be well equipped to do it on your own. And hopefully this provided value to you guys. Again, look at this. Look at this. This buy right here, and now it's forming again. This sell was perfect. We lost 15 on this, but this one recovered everything, and now it's back again. Yeah, definitely. You can definitely make it happen once you understand what to do. Don't be aiming for the money. Aim for the percentage growth and helping as many people as possible. These billion-dollar trading companies are not one or two guys or three ladies or whatever. They're thousands of people who are invested 500,000, 1 million, 2 million, and so on to make up that $1 billion. And if you're the kind of person who just wants to just pay your bills and make an average amount of money, it's much easier to start making $500, $2,000 a day, collecting rebates on all your trading referrals. And you have a legitimate system that's working every day, consistently doing 1% to 2%. And now you have a network of traders that will continuously keep paying you. You keep getting paid, traders keep trading, and it never ends. But just to keep it really simple, the Federal Reserve is giving their money to banks. Banks are giving their money to clearinghouses who are filtering the data, and they're giving it to brokers who are paying us. So even if you, me, and your friends and everyone make $5, $6, $7 million, or even $100 million each, that won't even be a little blip on the charts. It won't mean anything. There's trillions of dollars in motion, and most of it is losers. So I hope this was eye-opening for you guys, and have a good day, everyone. Goodbye at 00.